Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Phan of Pacific Private Money. Mark Hanf is off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate is not sponsored by the radio station, but by Tan-Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And the certificate is worth over $100. You're going to want to call in when it's time to answer the trivia question. Today's trivia theme is entertainment. All right, Nam, what do you got for us? Real estate's going crazy, isn't it?
It is. I'm exhausted, Edward. We're doing this, recording this show on a Wednesday, so I don't know how the rest of the week's going to go, if I'm going to be able to make it. But it's hot, and a few of the articles I printed out to discuss today, are along the lines of what's going on in the residential real estate space. But yeah, things have not let up. Usually, June. Well, it's already the end of June, but usually in the summer you have a little bit of a lull. Like most, you always hear of the spring real estate time and then the fall, which they say is the second spring in real estate.
Yeah.
And then in between you have the summertime, where it's certainly higher than the season, the holiday time.
Uh-huh.
But usually it's a little bit lower than between the spring, between spring and fall. Yeah. In terms of just real estate activity. But this hasn't slowed down. I mean, people, even though things, at least here in the Bay Area in California, are getting, quote unquote, back to normal, where people are getting out and they're just not stuck to their computer looking at homes to buy and wanting to get out of the city. Sales activity continues to be brisk. And we're seeing that in sales prices, the average loan size that we're getting, the aggressive offers buyers are making on listings, and then the continued, number of multiple offers in the real estate market. And why are we talking about residential real estate versus loans? I mean, for us, it's one and the same. I mean, we can't talk about real estate activity or lending, without really also addressing, what precedes that, which is just the general real estate activity in the marketplace. So again, we're having, I think at the end of Q1, on one of the shows we did, we talked about how how Q1 was a record for us. And Q2, even though today's the last day of the quarter, and all the numbers aren't final yet, it will be a record over.
Okay, I don't get this. Everyone's talking about a mass exodus from California. I mean, we lost a seat in the Senate. If there's all this exodus, I mean, I guess in theory, people who are exiting means sales. And so those people are, well, but they could be renters leaving. So how can you guys be so busy?
Yeah, I think, that I think maybe it was about 6 weeks ago, we did a show where we talked about, or 2 months ago, we talked about, some real statistics on where people were moving to from the Bay Area. Because you always read about, people in Austin or Bend, Oregon or Idaho just say, feels like California here. It's starting to feel like California. Maybe that is the case to a degree, but the actual numbers of people moving out of California, or maybe the net migration, isn't as high as people think, because there's also, some migration into California. A lot of the transaction activity we see, on the bridge loans we do, is really just moving from one part of California to another. In many cases here in the Bay Area, it's just moving from San Francisco to Marin, or San Francisco to the East Bay. And maybe now you're seeing more activity of people moving into San Francisco, because they see that things are starting to normalize. And San Francisco, Silicon Valley, is still the hub of tech, and the local economy.
It's interesting. We talked about this before, and this was, even a year ago, where I talked to some guy, COO of a big company, and he had said, we're already starting to ask our employees to come back to work as long as they social distance. And I guess that's kind of, and I've said this for weeks and months, if not years, no, only months, that a lot of these companies are realizing, you can only work remotely for so long. and be productive.
Yeah.
There's just not enough efficiency. So as long as either, vaccination, masks, social distancing, et cetera, you can, and things are calming down with, COVID related illnesses, that they're going to just have to start having people come back to work.
Yeah. Yeah. And I think Uber announced that this past week that they have a schedule for people to be able to work from home or work remote a certain number of days of the
Wait a
week.
minute, how am I going to take an Uber to my favorite restaurant remotely?
Yeah, that's a good
Yeah.
point. Boy, we could spend
Oh,
a
you're
whole
talking about the
episode on
workers in the office, not the drivers. Okay.
Yeah, it's not the
Now I
drivers.
understand. I'll tell you what, hey, let's cut to our first commercial. We always have to add a little levity in there. Here's our first trivia question commercial break. In Monty Python and the Holy Grail, what do the knights bang together to mimic the sound of trotting? Okay. So in Monty Python and the Holy Grail, that was a movie. What do the knights, like Knights of the Round Table, what do the knights bang together to mimic the sound of trotting? As like horse trotting, Trotting. Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. And by the way, I want to make a quick mention here for Palio Restaurant. We decided to go there last week. Phenomenal. The prices are reasonable. They did not charge that extra little percentage that San Francisco restaurants do because of health things. So it was reasonable. Food was phenomenal. Service was excellent. Check them out. Palio Restaurant in downtown San Francisco. And stay with us. The Best of Investing. I'll be right back. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. First trivia question. In Monty Python and the Holy Grail, what do the knights bang together to mimic the sound of trotting?
Coconuts?
Yes.
No way.
Yeah, you were confused.
Wow.
Yeah.
Awesome. That was a total guess.
Now, how did you guess that if you hadn't seen the movie?
Because I think I've seen people do that in other shows before.
Oh, yeah, as sort of a parody on that.
Yeah.
Hey, before we start, I do want to make a quick mention here also for Transcendence Theater Company invites you to experience Broadway Under the Stars in Wine Country with their new live show. Come sing along with your favorite Broadway tour guides in this exciting musical expedition for the whole family, August 6th through the 29th. And this is actually at Jack London Historic Park. Beautiful venue if you've never been there before. Get your tickets now at bestnighthever.org. All right, Nam, why don't you continue on? You're talking what's going on in real estate.
Yeah, so in the last segment, we were just talking about just the real estate activity, whether or not there was actually true mass exodus out of California. And, basically, we're not seeing that. We're seeing most of the activity here in the Bay Area and, really just California, people moving from one city in California or community to another. And, and we were talking about whether or not, companies will require employees to come back to the office. I think that for certain types of occupations, you're going to have people who will continue to work from home because I think there are positions where, and also obviously circumstances for each person that can determine whether or not they can be productive from home.
Exactly.
So I think that remote work, will be just acceptable and probably expected.
Well, it depends on what kind of business.
Yeah.
I mean some stuff. Go ahead.
Yeah, I was just going to say, certainly here, we've had today, we have alternating sort of crews coming in, like our underwriting department today comes into the office on Wednesdays, and our closing team is here. And, while not everyone's here, it's packed. And I can tell, there's some inefficiencies of being on top of each other too. Just idle chatter. So
and especially if you have 4 people sharing one computer.
Yeah,
you know what? You got to take the water cooler out of the middle of the office. Then you won't have all that water cooler talk.
Yeah, not have 4 people sharing one keyboard. That's really tough.
Yeah, that'll help.
But
you know what? The idle chatter part, that's very interesting because it inevitably happens, especially getting people back together again.
Yeah, I mean, it'll normalize where people will say, okay, I've caught up enough on your life, or we've talked about, which Netflix series we've watched, but at the end of the day, though, still, it's very easy to turn around to a colleague and just say something. right?
Sure.
And
Well,
and
that's when you need to have one of those whistles like they have at the mine. You know, okay, everyone take your 15-minute break. You know,
Oh, there you go. Well, Mark bought these electric fly swatters. We could use those in the office
exactly.
yeah.
That's right.
Less painful than a taser, but it'll certainly get your attention. So
Just tell them to stick their tongue out and.
there you go. But seriously though, I mean, we need to hire more people. We're growing, and some of the things we'll talk about, like we did in the last segment, is we had a phenomenal quarter, and it's going to continue to look like that. So we need to hire more people. But I am totally open, or we are totally open to hiring remote staff, like in underwriting,
Okay.
for instance. So much of the work is done not only between the internal staff here at Pacific Private Money, but our institutional buyers.
Well, so here's the interesting thing on that is, you trying to get people to commute from far away when you can, instead of hiring someone, let's say from San Francisco, right? San Francisco is more expensive. It's going to cost for employees. So hire someone from Napa or Santa Rosa, and they can do the same work. And from an employer standpoint, you don't have to pay as much.
Or hire them in Texas, and
if it can be that remote where they don't even have to come in periodically. Yeah. Absolutely.
Yeah, I mean, some of what we do, lending is not like it's a new tech, for instance, that requires you're learning something that's never been done before. It's been done for forever. And underwriting, for instance, alone, you need access to the documents to review and to the files, and you need to be able to do that securely. But at the end of the day, underwriting is underwriting. It's the same thing that it's been for forever. So if we can find somebody competent in Texas, and where the wages are significantly less, then why not hire somebody who's remote?
Yeah, as long as you can get them on the phone quickly or text quickly, or computer wise. Yeah, that seems to be the inefficiency, I think, is the communication, where you can't just pop into someone's office really quickly. Hey, got a quick question on this file.
Right.
Who knows where they're at? They may get back to you an hour, 2 hours, whatever.
Yeah, and also we're looking for East Coast staffing too, because a lot of our loan buyers are on the East Coast. So being in the same time zone as our loan buyers can be more efficient than being here in the Bay Area.
That's a very good point too. Sure.
So we'll continue to look.
Yeah. Now, what are you guys charging now for short-term loans?
So for short-term, let's use a bridge loan for example. If we, I can tell you, we've been able to offer borrowers lower rates than we were this time last year, and for a number of reasons. I mean, just the quality of the file, the loan file, the borrower's credit score. On average, it's above 720.
Wow.
In many cases lately, it's been north of 780. So the properties, obviously high-end properties with a lot of equity. In the bridge loan examples, we have a lot of people who are cross-collateralizing, and the total loan to value is 60% or less. So with that, those are risk mitigating factors. Yeah. And that can be reflected in a lower rate to the borrower. So long way of answering your question, I would say it's not uncommon to see rates in the high sevens. Okay. And or up to the high eights, where maybe a year ago or 2 years ago it was high eights to low tens even, but probably high nines, more like high nines. So it's not uncommon to see rates go down by a full point or so.
Wow, that's pretty significant.
Yeah. So and just there's other competition too in the marketplace that's offering lower rates. But if we can take that $1 million loan, which is the average size of our bridge loan, and turn that capital around several times a year, then that can be a very profitable use of the capital for us.
Yeah, absolutely. Really, it is kind of competition that kind of drives the prices. And part of that competition is also what you have to give to your investors in order to get them to invest.
Yep.
I mean, because even if the competition is at 4%, if you have clients who are not willing to accept the 4% yield, you just not going to be able to compete like that.
Exactly. And a little bit later, we'll talk about the webinar we just did.
Yeah.
So and
Yeah.
we'll talk about rates.
And we also are going to do an email question about deferments as well as deal of the week. All right, here's our second trivia question. The theme is entertainment. What is the name of the coolest girls gang in the movie Grease? What was their name? They even had jackets to go with it, if you remember.
Yeah.
So the movie Grease, what was the name of the coolest girls gang? Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. And stay with us. You are listening to The Best of Investing. Do not touch that dial. We're going to be right back. Welcome back to The Best of Investing one more time. I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. Second trivia question. What is the name of the coolest girls gang in the movie Grease? What was their name?
I don't know.
Do you remember the boys' names?
No, no.
The one with John Travolta, wasn't it the T-Birds, the Thunderbirds?
Oh, was that what it was?
And for the women, the girls, it was the Pink Ladies.
Oh, the Pink, yeah,
Pink
that's
Ladies.
right.
I knew you'd know that one.
Yeah.
All right. An email comes in, and it says, "How have you handled deferment requests if you had received any of them?"
So boy, that's a good question because if you asked me last year at this time,
Yeah.
we actually haven't had any, we rarely get deferment requests. So going back to, actually, if that question were asked this time last year or beginning of Q2 last year when COVID first hit, then, we had many more deferment requests. Like I'd say the number of requests we get today for deferments are about average, for a private lender. But when the pandemic first hit, we got a number of deferment requests that came in, and still though, as a percentage of our overall loan portfolio, it was actually somewhat on the lower end. But typically, why is a borrower asking for deferment? I mean, a deferment is asking for payments to not be made, currently, and to be able to ask that those payments be made at a later time or deferred to a future date. And there's a number of reasons why somebody may request that. They lost their job, or something happened in their personal financial situation besides losing their job and losing their income that's impacted their ability to make the payments. We have to look at those reasons, and they have to have a bona fide reason for the deferment. We weren't obligated to necessarily automatically approve deferment. I know in California, probably nationwide last year, there was mandatory forbearance, allowing for forbearance. But as private lenders, we weren't necessarily under that same regulatory environment.
Sure.
But nevertheless, I mean, we're not loan sharks. We're not looking to take people's properties back. We want to, have our loans paid off quickly, and with the long-term goal of having that borrower or actually near-term goal of having that borrower refinance into a long-term loan. So if we do any kind of deferment or foreclosure, anything that can impact their ability to refinance or finance out of our loan, then that's not going to help their situation. But we essentially look at their circumstance. Why are they requesting the deferment? What is the hardship?
And you can't just yell COVID and suddenly you don't have to pay.
Right, and we've had that happen too.
Yeah.
People saying, "Well, I got COVID." Well, let's dig a little bit deeper than that. Where we did make deferments, somebody's business was significantly impacted,
like a restaurant.
Like a restaurant, and I can't say it was, a restaurant that this borrower had during COVID, but nevertheless, their business was impacted, and.
Well, I know. Let me interrupt for a second. I do know of one situation where somebody was a commercial leasing agent, and when things just died, that person's business died, and that person requested a deferment and was granted a deferment for a good amount of time, and then a person got back on feet and went ahead and made payment and is all caught up now.
Yeah. I mean, so you have to look at their track record in the past, the kind of business they're in, what their circumstances, and there is a little bit of what will they be able to get back and start earning again. And you take all this into account, and we ended up, deferring several borrowers, but we also declined quite a few as well, just because they couldn't really fight a bona fide hardship. And some of them were simply, we sent them the information, you have to fill this out in order for us to review it, and they didn't fill out the information. So it's just basically a lazy request.
Lazy request, yeah.
Yeah, so for those circumstances, it's an automatic no.
Hey, before we cut to a break, because we have a few minutes, you guys just finished a very nice webinar. Why don't you tell us about that?
Yeah, so we had our first webinar in a while, and it was last night, Tuesday night. We had a webinar on the Pacific Freedom Fund. We haven't had a webinar or really any kind of information session about the Freedom Fund in quite some time. So we just wanted to get our investors or potential investors and existing investors caught up on what's going on in the Freedom Fund. We launched Freedom Fund a year ago, April, and in that time, through the end of this month, June, we've grown the Freedom Fund to about 22-23 million. And so it's been wildly successful for us. For those who aren't familiar with the Freedom Fund, it's a fund we use as a quasi warehouse line credit, where we use the fund capital to fund loans that we have earmarked to be sold to institutional investors. Yeah. And as I mentioned, it's been very successful for us. We funded year to date, over 60 million or so in loans. Wow. And these are loans that we then turn around and sell 2 to 3 times a month in package. We package them and sell them to institutional buyers. And many of these loans are the bridge loans we talk about all the time.
It's interesting. I've heard people say, well, what about the crash of 2008 and, the securitizations and all these kind of things. But the big difference that I see is the fact that you're not lending to, people who can't afford it and are trying to buy 3 different houses on a salary of a minimum wage. I mean, right. these people have good credit or good income, low loan to value. I mean, they're not skating by.
No, and in fact, our average loan is about $1 million, and that we're making, and they're all in the more expensive zip codes in the Bay Area, and Southern California. And actually, when we get into the next segment, we can go into more detail on the Freedom Fund. Okay. And the kinds of loans that we
there's really not too much of a risk because you're unloading the loans back there to Wall Street, so to speak. So it's really their problem. They've really, I mean, not to be mean or anything, but it's like, you've said, listen, this is your requirements. I'm fulfilling the requirements. I'm getting the loan in and I'm giving it to you. They sort of pre-looked at it and then they're willing to take the loan on. So
yeah, and you know what? We should talk about that a little bit in the next segment. Why, what is it about these loans or loans that we're generating that they want to invest in?
Yeah. All right. Here's our next trivia question. Which musical group was built around the songs of the pop group ABBA? Remember ABBA? Mm-hmm. Yeah. And in fact, ABBA was offered $1 billion apparently to get back together, and they said, nope, we're done.
That's amazing.
What was the name of the musical that was built around ABBA? All right, call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Stay with us. The Best of Investing. We'll be right back. Welcome back to The Best of Investing. I'm Edward Brown, along with Nam Phan of Pacific Private Money. Our third trivia question was, which musical was built around the songs of the pop group ABBA?
Mamma Mia.
Mamma Mia. Very good. Actually, got 2 out of 3 this time. That's pretty good.
Oh, right. I'm on a roll. I saw the Mountain Play Theater version of Mamma Mia.
Was it good?
A few years ago. It was pretty good. Local actors. Somebody I went to high school with, in college with, was actually playing one of the characters. And
I saw the play in England, of all places. Wow. It was very good. And then actually when the movie came out with Meryl Streep, she did a very nice job.
Yeah.
Just don't get Pierce Brosnan to sing anymore. But other than that, it's fine. All right. So tell us a little bit more about that Freedom Fund.
Yeah. So, we were talking about in the last segment how we had a webinar last night and how we use the Freedom Fund as a warehouse line to sell loans, many of them bridge loans, to institutional investors. And during the webinar, one of the questions was, you know, why would somebody invest in a bridge loan? You know, because it pays off so quickly.
Yeah.
You know, certainly that's a very valid question if you're a trust deed investor who is looking to earn a healthy return. You know, what you want as a trust deed investor is consistent payments.
Yeah.
You know, obviously a high rate of interest, but also that loan to go as long as possible.
Yeah, no downtime where it sits in cash.
Yeah, no downtime. Well, some of these bridge loans pay off in 2 months, 4 months, 6 months. So if you're a trust deed investor, you know, you get paid off, then you're back in cash and you're looking for the next deal. And while you're looking for the next deal, you're not earning anything on that money that you just got back. So a lot of trust deed investors don't like bridge loans, just not because it's a bad quality loan, it's just such a short term.
Yeah.
But if you can create a
Makes
pool
sense.
of these and securitize them, then that can be appealing for Wall Street, because for the very reasons why, you know, they're considered, you know, relatively, well, risk is mitigated because they're so short term. The borrowers' FICOs are, you know, at least for the loans we're seeing, you know, 720 and above. They're all high end, and there's generally a clear exit, which is the sale of property that they're that they're selling, and those proceeds are used to pay off our loan. So, you know, if you're an institutional buyer, if you're put on your like investor, New York Wall Street investor hat, and you see all of these loans coming in, saying, I like that they're only 4 or 5 months, because the longer you hold a loan, the more the chance there is that something will happen.
But
right?
don't they run the risk too that they have to keep their money working?
Absolutely,
Okay.
absolutely. So they have to factor that in, though, that there's going to be a certain amount of turnover in a securitization of capital that's getting paid off every month or coming back into their fund. But as long as it's being replenished, then that downtime is minimized.
Exactly.
So it's our job as you know, the lender, the originator, to find more bridge loans to continue to you know, sell into the securitization as other bridge loans pay off.
Okay, so tell us, if an investor is
Mhm.
invested in your fund, what
Yeah.
rate of return do they earn? And then give us like a typical bridge loan situation.
Yeah. So you know, you take what I just explained about an institutional investor who has 100 million securitization, and every month 10 million of that 100 million pays off. We at Pacific Private Money need to find 10 million more bridge loans to fund to get that securitization back up.
Okay.
So take it down to the investor level who may be interested in the Freedom Fund.
Yep.
Say, why would I want to invest in the Freedom Fund? Well, if you invest in the Freedom Fund, then once your funds are invested, unlike a trust deed investment, it's our job. Well, we tell you we're going to continue to pay that return. In this case, for the Freedom Fund, it's 6%, irrespective of whether or not we have a loan in the portfolio that's.
Okay, so 6%. The answer is 6% from the standpoint of what does the investor get?
Yeah, the investor gets.
That's okay. An investor gets a 6% consistent rate of return paid on a monthly basis, which is 0.5% a month, basically.
Yeah, exactly.
All right,
Exactly.
that's good for short-term.
I'm really long-winded today, Edward. I don't know. It must be all the donuts I ate donuts today.
Donuts? Wait a minute. You didn't tell me about donuts.
Yeah.
Shit, man, now I'm thinking about donuts. Yeah. Okay.
So yes, bottom line is investors earn 6%. And why would you want to invest in the Freedom Fund? Well, it's our job to continuously feed the Freedom Fund with new bridge loans that.
Give us an example of those bridge loans, the type of loans that go into the fund.
So a few examples are, and these will be my deals of the week essentially, or deal of the week is, you know, we have several agents who are so tied in with real estate agents in Marin, Southern Marin, San Francisco, and these realtors are bringing us clients whose problem is this: they have a great home to sell. But they're afraid of selling it because they know it'll sell quickly in this market. Within a matter of days, you get an offer that probably will be well over asking.
Yeah.
But they are stuck with, where do I move to? And so a lot of people won't even list right now because of that fear.
Yeah.
But if you tell them, listen, you have a way of buying your next home before selling your current home with a bridge loan for Pacific Private Money, then that'll allow you to do the opposite. Get your next home first and then sell your home. So the bridge loan is literally that. It's a loan that bridges the purchase and sale. So we provide
it's a very good tool.
Yeah, exactly. We provide the capital for you to go out, find your home that you want to move to next, your next home. We fund that, you move in, and then you have the time to, freshen up the home that you just moved out of and stage it and then sell it. And in this market, again, it's selling very quickly.
And before we go to break, because we got just a couple of quick minutes,
Yeah.
Can you give us an example of a deal of the week of one that you just recently did?
Yeah, so we have, this one's actually interesting because it's going from one state to another. So we've had several deals, and again, this is not an example, there's not mass migration out of California, but we have a borrower or homeowner in Marin County who had a home to sell. It was, or wanted to sell their home, but wanted to buy up in Oregon.
Okay.
And they had essentially 100% equity in their Marin home. They found a home in Oregon that was actually close to the same price, but it was much bigger.
Okay.
And it was, I think it was around 2.2 million. And we provided a bridge loan, essentially took the capital used the equity in their Marin home towards the purchase of their Oregon home.
So effectively, you're really at about 50% loan to value if it's apples to apples.
Yep. And then, so we give them with the bridge loan 11 months to pay us off. There's a balloon payment at the end, but there's no prepayment penalty if they sell their home or pay us off ahead of time. And in this case, I think they sold their home within 4 months. And
so they just had to pay a little bit higher interest for 4 months. That's not such a big deal, but they got the house they wanted. They didn't have to move twice.
Yep.
So especially going to Oregon from California, it's not like down the street where you have to move again. I mean, that's a big haul.
Now, if they wanted to escape the heat, that's a different story.
If they wanted what?
Escape the heat.
Yeah. Oh my gosh, that's right. There's kind of a heat wave going on.
Yeah, it was like 109 in Bend, Oregon, or something like that.
Wow.
Crazy.
I wonder how they deal with that. They're not used to that, especially, with all the foresty types. We seem so cool and wet and rainy over there.
Yeah.
The same thing with Seattle. All right. Let's see here. We're going to cut to our last commercial break. There's no trivia question. When we come back, we're going to have some thoughts for the day and maybe a couple of other interesting tidbits for us. All right. Stay with us. The Best of Investing. I'll be right back. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. No trivia question. But Nam, why don't you give us a rundown because you have different funds to offer.
Yeah. So we mentioned the Freedom Fund, which is our quasi-warehouse line that pays 6% rate of return. We also have our legacy fund, the Pacific Private Money Fund, and that's a fund now in its 8th year, paying between 7 and 7.5%. That fund is currently at about 62 million in assets under management, and again, that one pays about 7.5%. Like all of our funds, Pacific Freedom Fund and Pacific Private Money Fund, you do have to be accredited to invest. So that's having $1 million net worth as a qualifier, or you can qualify based on your annual earnings over the past 2 years. I think you have to make 200,000 as an individual. You have to be able to show that on your tax returns, or 300,000 as a couple. The minimum investment in the Pacific Private Money Fund is 50,000. Okay. The minimum investment in the Pacific Freedom Fund is 250,000. So those are the first two funds that we talked about. The next one is the Pacific Southwest Note Fund, and that's a fund that we have based largely out of Texas. That fund is dedicated to buying solar carryback notes, and that's an interesting model in that there's opportunities to buy notes, what are called solar carryback notes, at a discount. Nice thing about the Pacific Southwest Note Fund is it's similar to the Pacific Freedom Fund, meaning that it pays a fixed return of 7.5%. Minimum investment for the Southwest Note Fund is 50,000. For the Freedom Fund, it's 250,000. So, pretty big difference there. And a nice feature of the Southwest Note Fund is you can redeem, like the Freedom Fund, quickly, right? There's no lockup period, or essentially there's lockup period. There's no redemption fee for an early with redemption. And then the final fund is the North Star Capital Fund, and that one is a minimum investment is 100,000. The return on the North Star Capital Fund is 8 to 10%. That's a target.
Okay.
It's been paying higher than that. Minimum investment, I think I just said, is 100,000, and it is geared towards construction loans,
okay.
which there's a shortage of construction financing for builders in California. So that's a great fund to take advantage of the shortage of housing.
Good. And all the funds are no load?
All no load to get in or get out.
Yep.
And you have to be accredited to invest in all of them. If you want to learn about any of them, give us a call here at the office, Pacific Private Money. That's 415-883-2150. Or you can go to our website, which is www.pacificprivatemoney.com.
And can people sign up on your website for future webinars?
Excuse me. You sign out the contact form.
Contact form.
Certainly.
Okay.
Yeah, and we'll put you in our email database for future webinars. You just got to indicate whether you're interested in investing or borrowing. But yeah, when you fill out the form, put down that you're interested in investing, and we'll invite you to all of our webinars.
Good. Why don't you give out your information one more time?
Sure. Information is 415-883-2150. That's our phone number. And our website's www.pacificprivatemoney.com. One other thing too is we do post these webinars on our events page on our website. So you can go to the events page, and if we have an upcoming webinar, you can sign up there as well.
Very good. So 2 of the funds have a lockup period for a year, and 2 of the funds do not.
Yep.
More information, pacificprivatemoney.com. All right, here's our thoughts for the day. Perfection is not attainable, but if we chase perfection, we can catch excellence. That's by Vince Lombardi, who knows a little something about that.
That's awesome.
And what do you call a bearded gardener? Harry Potter. And lastly, dogs can't operate MRI scanners, but CAT scan.
I like all of those.
You like all those? Those are a couple, 2 out of 3 are dad jokes. All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best
Goodbye.
of investing. So long.